I cut the previous snippet out prematurely, but we did just get stopped out, and you see significant cross trade. Look at this: 4,300 to 26, 3,000 to 26, 27 to 19, 22 to 14. This is the area that I would be looking to get re-enter the market on the long side. We're going to see if we can't find an opportunity here to do just that. We're just going to go ahead and take the 35.25 right here. After getting filled at 35.25, now I'm questioning my decision based on the fact that I just communicated in the last snippet that the volume cluster was at the 30s. We're right in an area where there's very light volume on the way up, and the G period went right through this area. Is that why 4,300 contracts traded passively at the bid without the market running any further? I'd feel more comfortable having a 30 position on a retracement, or 29 to 32 area. I also mentioned earlier that we don't desire to scale in with 4 contracts, but I'm not sure this is the time in my learning curve, not to experiment with that. Mixed emotions about that. For the most part, that strategy, we were able to better the positions and make decisions to get out. It allowed us a degree of flexibility that we don't enjoy with this particular trading methodology approach implemented over the last few days. Unfortunately, we don't have a lot of data to base any. We don't have a length of data to base our observations on. Just a few days. Even the month of February is not a lot, but we're working toward that. So back to the question at hand. If we do get down into the third, that would be about 5 points below where our typical stop is based on what we're doing this month, which of course puts us in a dilemma. It stops us out of this position for a loss and puts us right in an area where we would have gotten long the first time, which of course which complicates the matter from a decision point of view, because if that area does hold, then you have people initiate the ask. Now, see, I think I'd be more comfortable now if I was entering the trade at 35.75 or 35.50 or anywhere here now, as opposed to a minute ago, simply because we've had a minute or two to retest this area and see what the volume build is in this 27, 31, 44, 2100 area, this block of trade in the 35s. What we need to see now happen relatively quickly is an initiated ask trade, where they initiate on the ask, driving the market higher. Otherwise, consolidating in this area is not good. That could absolutely put us lower. So, with 35.25 trade location, if we don't see them hit the ask quickly, the alternative is to mitigate our 5-point stop loss, which is probably good, mitigated by analyzing incoming data and making a quicker reactionary move, and maybe limiting that loss by 2 points, 3 points, 4 points maybe even, or even up to a break even, eliminating it altogether. Of course, all of that point is completely negated if we hit our first target on the contract, because then we actually do have a hard stop that comes in and sets our risk to reward parameter at 5 points reward to half a point risk, and that's a good risk to reward parameter. So I like that hard stop after the first target's filled. Of course, we're talking within the framework of having that first target not filled and coming to a decision as to whether a rigid stop at 5 points is appropriate, or whether, analyzing data points like a stall in this area not hitting the ask, and then of course taking the course of action to liquidate the trade before in fact the effect of that not hitting the initiative on the ask occurs, which is of course breaking down through support. So having said that, what do we see? Well, having said that, we see them hitting the ask here in this negative, in this reversal column. We have a positive delta. That's a good sign. And then of course we see here in this column, the pullback column, we're building a negative delta. which negates what we just talked about. So there's a little bit of a quandary there. It would be nice if they would have hit the ask to a greater degree. Um, my overall feeling is we still have positive delta from that previous point, 873 in that column, and 34 to this point in this column. So, having said that, our 35.25s have our first target exit at 36.75. We're only 2 ticks away from that, so I feel more comfortable in this trade now. We'll take the first target. We'll put our hard stop in. That has not really worked all that well. It put us out of the market with a small loss on 2 trades. Unfortunately, we were looking for 5 or more point targets, and we didn't achieve that. I'm still looking for a rally into the close. So now we see them start to hit the ask a bit. Now we see the ask activity coming in from the 34.75s up through the 35s, consolidated with a little bit of activity in the 35s and in the 36s. We got our first contract. We'll put our stop in 2 points below 35.25. That puts us down below the consolidation area at 33.25. So if we did take 33.25 out, then I would think that there was a good chance the market could do one of 2 things: consolidate in the high volume cluster in the 30s, or continue down to test the low of the value area, which is all the way down in the 22s. Now that would be a good area to buy, or maybe 17 if they took it to yesterday or the previous day's low, 2.6 I think. Not sure what day that was, 2.6, 2.7. Well, 2.6, yeah, it was 2.8. It was Friday. Well, I don't know if we got to 17. No, that was 2.7 Thursday, down at the 17s. Alright, we're going to pause this video and take a break. You know, it's funny just thinking here to the previous video, and a little bit of a problem with this production, and then a thought hit me. You know, we got stopped out 34.75. The low was 34.50 on that move before the up move with our new position here, and we had just talked about, you know, potentially bettering the position, even though that's not what we have been practicing the last few days. And sure enough, it did just what we were talking about: come right to the value area high, test the 34.75, stop us out. And now, fortunately, we got back in at 35.25, and it seems that they're hitting the ass now. We're on our way, you know, back up toward the high end of this volume cluster. But nonetheless, you know, we took the 5-point loss when in reality there was no need to take the 5-point loss. We saw the reason to get right back in the trade at the 35.25. Now that's good, getting right back in. But you know, having the 39.75s, we're right back to the 39.75s. You know, I would have been in a much better position. Always conflicting processes that need to be reconciled. Challenging exercise, but very interesting. Alright, we're going to pause this video. We have about 1.5 minutes left on the production line, so we will revisit. We have our target as the close, which again is a little bit unusual for me, but my whole stance in today's market action was to anticipate short covering rally out of the consolidation, and that of course would happen from here to the end. So maybe we can catch a big move, and that would be a wonderful thing. We need to bust above the J&I period high. The K period low, 34.75, looks like it was the re-entry for a retracement. And like I say, in reiteration, we got stopped out, we re-entered, and on the replay it's going to be really interesting to watch that and revivify that emotional state and learn. We are running out of time on this video, so I need to be brief. We're following our trailing stop now. It's moved up to 35.75. We hit our 6-point range, so now we implement the trailing stop. That'll move up as we make new highs. Stop's moving up to 36.50. The end period just opened up. Our stop now has been moved up to 36.75. 36.50, I'm sorry. Looks like we're about to get stopped out on our trailing stop at 36.75. Or excuse me, 36.50. I want to keep that there, as I'd like to employ that trailing strategy to a degree at some point to help me, you know, catch a big move like a short covering move. Today it didn't happen. It seems that we gave our ability to have a 6 point trade um, while we were up at the 42s, but that wasn't part of our planned strategy. So we followed the rules, you might say, to our. I can't use the word detriment. I don't want to do that because it's not really to my detriment. But I do need to produce this video. We're not stopped that yet, though. I'll write about it.